Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted this week to be joined by Claire Wright, who is CEO of Hanwha Ocean Europe. Claire, thanks so much for joining us today.
It's great to be here. Thank you for having me.
Well, lovely to have you. Of course, I mean, the company you're with does focus on shipping and some specifics within that. But let's just start with a generic question for you that, obviously it's been a very dynamic year or two and only is getting more so. And we'll get into the technical specifics of retrofitting and, transition sort of talk. But I just wanted to start by asking you, whether you see the sort of, I suppose, structural shifts of redirection of flows, sanctions, etc. Has that had an impact, do you think, on the nitty-gritty of how investors are looking at shipbuilding, or does that sort of continue operating on its own sort of decision-making path?
I think if we look at the impacts on shipbuilding, obviously we've seen quite a lot of geopolitical events, market headwinds over the last few years, which have driven freight and earnings, obviously from COVID to the invasion of Ukraine, ships diverting away from the Red Sea. Over the last year or so, though, we've seen the markets, quite a few markets settling down in a way that suggests they've factored in this permanent or constant
Hmm.
uncertainty at the moment, and therefore it's having less impact on that rate volatility, which then means that the drivers of the market are coming back really to the fundamentals. And certainly from a shipbuilding perspective, it is generally the longer term fundamentals that drive the decision to invest in what are very expensive assets. And obviously, this relates to the supply demand balance for those markets, to the long term outlook for the cargo that's being carried, as well as regulation, which is a fundamental driver for the shipping industry.
Yeah, I mean, you mentioned just to touch on that regulation. That is a very big part of obviously investment decisions. I mean, especially for retrofitting, from conventional to future fuels or even hybrid new shipping systems. I mean, huge investments, as you said, which are there to last once that's fitted for at least 10 to 20 years. And do you feel that the regulatory side of things has improved? Because, we had a lot of discussions, I remember, around IMO 2020 at the time about the new sort of sulfur fuel and the directives on that and shipbuilders saying, okay, fine, fair enough. But really, we need more clarity on projected regulation. How is that doing in Europe, let's say, just taking that as a geography?
Obviously, the IMO is a global regulator, and
Yeah.
certainly from an industry perspective, we prefer global regulation because it is much more straightforward for the industry to comply with, and it has less disruptive impact on trading patterns if the regulation we're following is global. The EU obviously has introduced, particularly around carbon management, its own regulation, and the IMO in April agreed a net zero framework which includes shipping's first global pricing mechanism. This will be put forward to the IMO next month in October for adoption. And assuming that that is adopted, then this will be a fundamental driver of change and the uptake both of new build technologies and retrofit technologies in our industry. And the reason for that is because this pricing mechanism essentially will evaluate each ship based on its greenhouse gas fuel intensity starting in 2028, and that will then make it much easier to calculate the return on investment and the cost benefit analysis of, from a retrofit perspective, the installation of particular technologies such as, say, wind technology, rotor sails, for example. And then on new builds, it will make the choices around which fuels to go for, which technologies to choose, much easier for the owner and the charterer to make those decisions based on the direction the regulation is taking. We should, assuming it goes through in October, have the certainty of the timeline really for the next 10 to 20 years.
Okay, and that's a good sort of guidelines, I suppose, for those investing in and owning ships. What about the actual ports, the yards, the when delve down into the sort of supply chain bunkering companies, sometimes they're cohesively owned, obviously, but then you do have individual players. Are the different sort of elements of that puzzle coordinating enough to be on time to fit together, if you like, as the directives and regulations come into play?
So I guess there are different parts to that, and obviously it's different depending on the ship sector you're looking at.
Mm,
So if we split that into, obviously we've got the vessel technologies, we've got the fuel availability, and then we've got the demand. So if I start with the vessel technologies, the company I work for, Hanwha, is like others developing a variety of solutions for different ship types. For all ship types, the base for any investor, any owner, is energy efficiency. And the reason for that is that the fuel that you don't use is fuel that you don't pay for under any regulatory regime. Then
mm,
it's the technologies that you install on a vessel to reduce its consumption. And from there, it's, well, what fuel choices do you make? Over the last few years, in some sectors, particularly containers, for example, we've seen choices of dual fuel propulsion. In short sea sectors, we see increasing demand, particularly in Europe, for batteries, for fuel cells. And from a Hanwha perspective, we're focused on that fuel flexibility element, which when you're thinking about a future investment and making sure
yeah.
it complies with regulation and won't become stranded, that fuel flexibility, in our case, is developing a gas turbine engine that will mean that the operator can blend to compliance. So as regulation changes, as fuel is available, you can start with LNG and then blend, for example, proportions of ammonia as that fuel is available. So from a technology point of view, shipyards, technology developers, we're working on those. The next is then the fuel availability, which will partly be due to the demand, but also to the infrastructure available
Yeah.
globally to produce, transport, and ship that to the vessel itself. And the timeline, having that certainty of timeline, will make the investor choices and the owner's choices that much more straightforward.
Yeah, I mean, as you said, sort of the demand, they need that sort of, I suppose, guaranteed demand for everybody else to sort of make the investment as well. I mean, you mentioned LNG. It's been, as a bunker fuel, it's obviously where I am in the Gulf, in Fujairah, for example, it's which is a big, obviously, bunkering port for the region. There's always talk of, okay, well, how soon will the advent of LNG bunkering really become sort of a mainstay, if you like? And from a sort of safety point of view, there's obviously questions as well, and investment point of view. But do you think that is going to become, I suppose, as common a fuel as conventionals or any other types of sort of cleaner fuels that might come along?
So the benefit that LNG has from an infrastructure point of view is that it's a globally traded commodity. And
Mm,
that means that there is production and transportation infrastructure that shipping can piggyback on, if you like, and that all shipping has to fund and build is that last mile infrastructure from the storage to the vessel. So when we look at the future, obviously we have many decades of experience of LNG as a fuel and as a
yes.
commodity that we can build on to make sure that it is done safely. If we look at ammonia, ammonia is also a globally traded commodity with a particular demand requirement in the agricultural sector. So again, there's learnings that we can take from having already shipped it as a fuel that we can then use to transfer to make sure that if and when ammonia becomes a fuel for bunkering, it too is rolled out in a very safe way. In terms of the development of global infrastructure, what happened with LNG is it started being deployed for ships that were on fixed trade routes, because then you have a volume of demand in one place. So containers and cruise, for example. Now we start to see LNG in far more ports around the world.
Yeah.
Is it still the same? Is it as yet the same as conventional bunkers? No, of course it isn't, because the regulatory requirement doesn't yet require fuels to be used that are not conventional fuels, and that will take time in parallel with the regulation. But a fundamental, from certainly my view, is that if you have a global infrastructure for the transportation of that commodity, it then becomes easier to build out the fuel infrastructure that shipping will need.
And would you identify that there's any regions globally that are sort of, I suppose, setting the standard or ahead of the game or have a natural advantage? Obviously, this is a global geographical shipping industry, you're sort of transporting things, I suppose, around the globe all the time. But where in the Gulf, I mean, Fujairah, as I mentioned it again, has made big inroads as becoming a big hub. There is competition in the region as well, and also looking east of Suez as well, and into sort of other Asian markets. Would you say one looking forward would hold an advantage over any other for any particular reason, or not? I mean, we've seen China, for example, make great sort of, I suppose, advancements in its decarbonization agenda in general. Where would you see the particular geographic advantages, if at all?
So I think there are two aspects to that question. One is the geographical advantage from a fuel production point of view. So if we're looking at the long term, when we're looking at low and zero carbon technologies, obviously the drivers of that is essentially the electricity generated by, say, wind, solar, potentially nuclear to create the green and blue fuels. And there you can see certain regions in the world that are advantaged in those particular attributes might be more advantaged in terms of producing those fuels.
Hmm.
The second bit is then the production and the use of those fuels, and that's where shipping, being a global trade, will need that fuel to be available globally. So one could see the region you're in being advantaged from a fuel production point of view, but you will still need the infrastructure globally to enable the fuel to be consumed. And that's where we do see some projects looking at green corridors, looking at how to set up that infrastructure, coupling the supply and the demand together. Korea, for example, is looking at ammonia from a power generation point of
Yeah.
view, and that would then create the demand that will then drive perhaps the bunkering, and therefore we can piggyback that off for the deployment of, for example, of our ammonia gas turbine engine.
Are you any concerns? I mean, we're talking about, obviously these are all to do with, regional cooperation, and we're in a period of time when we're seeing the global shipping order, the global oil order, the global money order, really being a little bit disoriented, and obviously this whole tariff debate and where that's going to end up and how it's going to impact trade, and of course shipping at the end of the day is very much going to be impacted by that, whether it's direct redirection or that obviously filters down to the nitty-gritty of cleaner fuels ultimately. But do you think the sector is at all concerned with the sort of geopolitical impact that tariffs might have going forward, and even how that might impact investment into the sector?
So shipping is an enabler of global trade, and the global economy over the last 30 years has grown based on the ability of shipping to very cost effectively enable supply chains to grow globally. So obviously anything that disrupts that is of concern to shipping, but shipping is very adaptable,
Adaptable.
and
Yeah.
it will adjust. So we've seen geopolitical tensions that have impacted, for example, the Red Sea, where a lot of ships are diverting around the Cape of Good Hope to avoid that instability in that area. And obviously tariffs, in terms of the impact that has on trade, does have an impact. We've seen over the last few months, we've seen shifts in trading patterns based on those tariffs, which has caused, say, congestion in some ports. But in the end, shipping will adapt. It's very flexible, and it will adapt to whatever regulations are brought in. Obviously, from an industry perspective, having certainty of regulation is absolutely the key. But as an industry, we are very adaptable to change, and we are used to
Yeah.
change. Obviously, from a US perspective, the thing that will have the bigger impact on shipping is the introduction of the USTR measures next month, which may impose costs on certain segments of ships calling in the US. And then if we look to next year, potentially the Ships for America Act, which we'll have to see what is included in that. But in terms of requirements for example, a certain proportion of LNG exports from the US to be carried on US ships, these things are likely to have more of an impact on the ships and the operation of the ships themselves rather than necessarily the tariffs, which will affect the cargoes that the ships
Yeah.
are carrying. So Hanwha, for example, we have a shipyard in the US and we have a shipyard in Korea, and so we are taking part in that, essentially that program of increasing the capability of US yards to be able to build the technically advanced ships that are required for the world fleet to ship the cargoes that the world needs.
Okay, and any concern, Claire? I mean, again, this is very specific, I suppose, to the energy sector and ships carrying oil. But of course, there's this whole. But from a sort of insurance compliance point of view, we've got the dark fleet ships that are increasing by number every day, not decreasing, despite sanctions and despite that intention, I suppose, whether you agree with it or not. But is that a concern? I mean, accidents waiting to happen, and of course that's filtering already through to insurance rates, and then it will impact, obviously, investment decisions down to what Hanwha focuses on. So how much of a concern is that for the industry?
So, from an industry perspective, obviously the dark fleet is of big concern. Um, Estimates suggest that there are now over 1,000 tankers, which equates to about 17% of the global fleet that are part
Yeah.
of that shadow fleet, if you like. We know these ships are older. The average age is 20 or more, and as you comment, they're often uninsured. Obviously, there's been a lot of talk about their impact on trade and the carriage of those cargoes, but I think I'd like to highlight two particular aspects related to that fleet. And the first that you allude to is the safety aspect. A lot of these ships are getting older, but we have no mechanism to be able to scrap them. So
Mhm.
normally, obviously, there is a contract between the owner and the buyer where the ship is sold, but a ship that's under sanctions, that can't happen. So at the moment, we don't have a mechanism for these elderly ships that will at some point need recycling to be recycled. If the sanctions are lifted, then obviously that will be able to happen. But at the moment, it's not currently clear how that can happen. And obviously, the older a ship gets, the greater the risk there is of something happening that could result in harm to the crew, but also to pollution to the
Of
marine
course.
environment. And obviously, from an industry perspective, that's something we absolutely want to avoid. The second is that when these sanctions are lifted, these ships are unlikely to come back into the conventional fleet because of their age, because of the poor maintenance. And therefore, it's highly likely that we will need quite a significant period of fleet replacement. If we look at VLCCs, for example, which are the workhorse of many crude trades,
Mhm.
about 15% of these are reported to be sanctioned. And so this will mean quite an uptick in new build demand at the point at which these ships are either scrapped or the sanctions are lifted and then these vessels are scrapped. So those two aspects, both how do we scrap them safely, how do we replace them, um, yeah, the dark fleet is of great concern to the shipping industry.
Absolutely. Claire, just one more question. Talking about new builds. China, of course, has massive shipbuilding yards and the impact that has been felt already in terms of its supply chain to be able to continue to do that because of this whole, back to this of tariff trade concerns. Do you see a change in balance of where the majority of future ships will be built from a sort of cost point of view, labor point of view? Is China at risk because of this, because of the geopolitical sort of situation, or where are the economics of that, do you think, going forward in the next 5 to 10 years?
So the economics of it are that obviously the major shipbuilders are China, Korea, and Japan, and we see
Mm.
certain specialisms between those three countries. So Korea still has an advantage when we look at more technically advanced ships, particularly, for example, the gases, LNG, ammonia, for example. And as regulation tightens and there's a need for ships to be more technically advanced and reduce their emissions, I think that Korea will continue, because of its advanced R&D, to have a really strong role in that. China is very strong in the tankers, the dry bulk. The dry
Mm.
bulk fleet itself is aging, and there will be a need for significant replacement there. So I think there's still a significant role for China in terms of new building. When we look at you mentioned essentially the geopolitical, I guess the US-China tension.
Yeah.
A lot will depend on what happens in the US Ships Act. which we're waiting for the details of early next year, around how the US treats ships that are built in China that will trade in the US. And we're waiting to see what that will look like.
Claire Wright, CEO of Hanwha Ocean Europe. Thanks so much for joining us today on Halftime Talk. It's been great to have you.
Thank you. It's been a pleasure.